Good morning, everyone. It is Monday, January 29th. We're getting ready to close out the month here, and we're going to review some different charts this morning. But first, just a reminder that derivatives trading is risky and past performance is not indicative of future returns. As we dive in this morning, we're going to start with the COT reports. And just some highlights here on the Russell that we can notice is that the commercial side of the market is short. So just something to pay attention to, as we had been long the entire year. So we can get into what that might look like in the coming weeks. On the Dow, we have the same thing here, where non-commercials are very long, and you'll see that here on the NASDAQ as well. Now, the thing to remember is non-commercials can't always exit their positions. Their job is not to realize profits, but put out a prospectus to lure in new money. So these could be your funds that they will show a return of maybe 25% in a year, but what is realized is actually entirely different, because they're not exiting those positions, they're holding them. And so while they are long, they are not actually realizing any of this gain. And again, this is performance chasing since November. On the S&P, we see the opposite. And so this is now our fuel for the upside. We saw the same thing happening in the summer as we rallied, as the non-commercial side got very short. And we're seeing that as well, as we're at all-time highs. And so while we get a different picture on the Dow and the Russell and the NASDAQ, the S&P gives us, being the thickest market and in the midst of earnings season, can help us to see what the agenda is. As laid out last week, we are now adding to those hedges on oil. And we saw the markup last week, which was almost perfect from 72. Almost got to the target. We got there last night at 79.5. But that was the target from the beginning of the week, and we've now fulfilled that. Give you two little bonus ones here on Bitcoin. We've talked about this a lot with our students in the past, as we headed into the end of the year with commercials very long right before the ETF, and then no surprise, they exited at the ETF decision. Now they're rebuilding a new position as the market dropped down to 39.5 and 40,100. So for our students, we have that right up from the end of the year, and we've been talking about this a lot. And then one more bonus one for you is the British pound. You'll see that the non-commercials got very long, then they went short, and then they went long again. They're long as it's being held up, but remember, the house will always win that game, and the same thing that played out here is likely to play out when this ends. So we monitor these every week as we move forward, and we do deep dives on those with all of our students. To get into some of the charts today, we have the NASDAQ, and we had levels specifically for Globex that were posted in the rooms for RTH today. Mainly, I would say trade around the blue levels. The orange, you want to watch for stronger reactions, but holding 17,471 is going to be big, as that's last night. But really, your line in the sand is going to be down at 17.2, so we've got quite a ways to go. On the upside, 17,792 is going to be really hard to break. We're likely to see a nice rotation if we can get over 622 up to 751. Otherwise, we're just looking to rotate in between these zones. On oil, this was our target from the end of last week, or from beginning of last week. We finally hit it in Globex. Again, when there's very, very large amounts of money at risk, very little is actually random. And so we had that as our target, and it was fulfilled. And now we are looking for a pullback somewhere in the 76.20 to 77.40 area as the next likely zone that we come down to continue the push higher towards 82 to 84, so that those commercials can rehedge at better prices. And then on the ES today, our line in the sand is at 48.89 3/4. For everybody, all of our students and everybody that understands where we're getting that and just knows how that changes price, that's going to be very big as we move forward. Um, Otherwise, we have cleared the path now after last week up to 49.51. So that's where we're looking for the market to eventually test and see our first introduction of new supply. Otherwise, we just have our zones here, 49.33, 26, 10, and 98.5. Just trade those. We're looking to trade those back and forth and rotate, which is likely as we have a lot of catalysts this week. On the agenda, just so you're aware, we have all the big hitters for earnings this week, which is going to be good for carrying out the agenda. We have FOMC, NFP, JOLTS, ADP. Can't ask for much more on top of month end and the beginning of the month. All else being equal, we have about $15 billion that will hit the tape on Thursday and Friday. We'll see as we get closer if those funds are going to change or not. But as of right now, that's a very supportive environment for the end of the week, right into Apple and Amazon earnings. So that's it for the weekly overview. Hope you guys stay safe out there and have a great day trading. Check us out at Sticks Trading Academy.